Hello, and thank you all so much for being here today. This is the NCNW Student Loan Debt Webinar. I am your moderator, Candace Spencer, and here we have some of our panelists for today's discussion. Before we start, I would like to introduce Ms. Sanjean Clay from the Women's Missionary Society, African Methodist Episcopal Church, to bring greetings.
Thank you so much, Ms. Spencer. It is my honor and pleasure to welcome you to the Student Loan Debt Seminar presented by the National Council of Negro Women Incorporated. President Thelma Daly, the Executive Committee of NCNW, and the entire membership joins me in welcoming you here today. We're excited to host you and know you will learn something new as well as enjoy today's presentation and today's presenters. Enjoy your evening, and again, welcome to today's webinar.
Thank you so much, Ms. Sanjean. So again, as I said, my name is Candace Spencer, and I have the pleasure of introducing some of these lovely ladies on our panel for today. But first, let me bring you a little bit of history about NCNW. So NCNW, short for the National Council of Negro Women, is a Washington, D.C.-based charitable organization, making a difference in the lives of women, children, and families through a four-pronged strategy that emphasizes entrepreneurship, health equity, STEAM, education, and social justice. Founded over 86 years ago, NCNW has 330 community and campus-based sections and 32 national affiliates representing more than 2 million women and men. NCNW was founded by the late and great Dr. Mary McLeod Bethune. NCNW's programs are grounded on a foundation of critical concerns known as for the Future. NCNW is known for its signature programs, some of which you may recall, Good Health Wins, which provides trusted healthcare information, and for producing the Black Family Reunion and the HBCU College Fair. I have the pleasure of introducing our first panelist today, Ms. Alyssa Picard. Alyssa is the director of the American Federation of Teachers Higher Education Division, which represents over 300,000 faculty and staff at colleges and universities across the United States. Her team runs the Union AFT Student Debt Clinic Program, which teaches student loan borrowers how to access income-driven repayment. And of course, the word we all have been hearing about lately, the Public Service Loan Forgiveness Program. She holds a PhD in history from the University of Michigan, where she was a member of the Graduate Employees Organization. Alyssa, take it away.
Thank you so much, Ms. Spencer. It's such an honor to be here with you tonight. So I'm going to take you through some of the information about income-driven repayment and also about the recent loan relief that the Biden administration has offered. And then Ms. Mangum, who's going to be speaking later, will be talking in more depth about public service loan forgiveness. So hopefully between the two of us, we'll cover all the turf that there is to be covered. Could you advance to the next slide, please? So we know that you may be here for a few reasons today. It may be that you or someone you know is struggling to make a monthly payment on a student loan. You may have heard about expanded access to PSLF or the recent $10,000 to $20,000 in debt relief and wanted to see if you're eligible. Or maybe you're hoping to get some clarity on what is going on with all of the recent changes to the student loan landscape. And across the country, there are people just like you who are engaged in these same struggles, which is part of how our union came to be doing this work with our members. And we hope that you will find today's session useful for whatever reason that you're here. We know you'll have questions. There is some time at the end for questions and answers. And I'll also share my email address as we go along so that if you've got further questions after this session, you're welcome to email me with them.
And Alyssa, I'm so sorry to interrupt. And also for anyone who has a question, please do drop them in the chat. As we're going through, we'll be picking out questions for the question and answer portion. So please utilize the chat. Thank you.
Fantastic. Could you go to the next slide, please? So that agenda is just the list of the stuff that we're going to cover. Getting people individual relief is obviously a really important part of our work, but we also need to think about a collective response to ensure not only that the programs that we're going to describe tonight remain available for folks, but also that we prevent future generations from finding themselves in the same circumstances that we're in now. And that is part of why we offer the debt clinics, both to give our members important resources and information that works for them individually, and also to help people kind of see the path to organizing politically to change the climate for student borrowers and for higher education generally. So I want to start with a little bit of context for us. There are 45 million people with student loan debt in the United States, and before the pandemic, 1 out of every 5 of those borrowers were in default because they had not been able to make a payment on their student debt for more than a year. So that's 9 million people. There are millions more struggling to make their monthly payments, and the Biden administration's decision to offer relief of up to $20,000 in student debt, along with the previously announced changes, is going to be life-changing for millions of student loan borrowers. But there's a lot more work to be done to make sure that every student loan borrower can get help with their debt. And although millions of individuals are struggling under the common burden of student debt, this burden, like so many others, is an intersectional one. Student debt is bad for everyone, but on average, it is worse if you are Black or brown or older or a woman. Students of color are more likely to borrow for their education due to the racial wealth gap. 90% of Black students and 72% of Hispanic students borrow to pay for their education, relative to 66% of white students. And those same students of color are struggling to pay it back after leaving school, also because of racial wealth and income gaps. One study found that 12 years after leaving school, the median white borrower has paid down 35% of their student debt. The median Black borrower owes 113% of their original balance. Women hold nearly 60% of outstanding student loan balance in the US. On average, Black women borrowed $6,000 more for their college education than white women, and $8,000 more than white men. And while we think of student debt as a problem primarily affecting younger people, it's actually a cross-generational issue. Americans over 50 hold about 20% of all outstanding student loan debt, and they are struggling to repay it. And of course, for those older Americans, falling behind can have consequences, including losing out on a portion of their Social Security checks. So when we put all that together, it's very clear that student debt is not an individual issue. And via collective action, we have been able to make some changes that will help millions of people in the communities that have struggled the most, but we still know that there's more work to be done to make sure no one's left behind. If you could jump to the next slide, please. So first, I want to quickly describe the terms of the new debt relief that the Biden administration is offering. This was just announced at the end of August, and this is the most recent development. This is going to outright eliminate student debt for millions of borrowers and substantially lower the loan balance for millions of more. Individuals who earn less than $125,000, or married borrowers and heads of household whose joint income is less than $250,000, are eligible to have $10,000 of their debt wiped away. And if a borrower meets those income requirements and received a Pell Grant at any point during their college education, the amount of the relief climbs to $20,000. This is going to be life-changing for individuals, and it's also going to address systematic disparities in the student loan system. Researchers that we're partnered with at the Student Borrower Protection Center have estimated that this debt relief alone will reduce the racial wealth gap between Black and white borrowers by 10 percentage points. We have not imagined any kind of intervention that would have that scale of an impact. This is a really exciting thing to have happening during the Biden administration. How will you access this? There's going to be a simple online form for doing it, but it does not yet exist. So keep your eyes out for the news that simple online form has come into existence. And this actually leads me to kind of one of my most important tips for you at this point, which is that to meaningfully access this debt relief, or any of the debt relief that we'll talk about tonight, you do have to pay attention to every piece of correspondence that you get from your servicer. The student loan servicing system is very frustrating, and I want to specifically name that avoiding correspondence from servicers and from FSA is a completely natural response to how frustrating and contradictory that is. But more than ever right now, it's important to make sure that your email and postal addresses are up to date with the federal student aid system and with any servicers that service your student loans. and that you keep an eye on your emails and your regular mail correspondence from federal student aid so that you will make sure that you've got all the information they're attempting to give you. Could we go on to the next slide, please? I mentioned loan servicers to you. If you are familiar with names like Mohila, Navient, FedLoan, Nelnet, those are all the names of servicers. They are the people who are supposed to help you navigate the system of repayment. Some of these servicers, including Navient and FedLoan Servicing, are actually leaving the student loan servicing business right now, which is adding complexity and confusion for borrowers because their accounts are being transferred to new servicers while they are attempting to access these different kinds of debt relief. Loan servicers can also make all of this more difficult by telling you about every single conceivable repayment plan or option you may have when you call to ask about your options. And most importantly, what they will often choose to tell you about are forbearances or deferments, which can leave you with a lot more debt and which are typically things that we would advise most people to avoid. And we'll put the deferments and forbearance and all the other questions to the side for now. And instead, I want to focus a little bit on income-driven repayment plans, just so you can have a sense of what is available to help lower your monthly student loan payments. Income-driven repayment and public service loan forgiveness, which Ms. Magnum will talk about later, are both free to enroll in. You should never pay anyone to enroll you in them. There are thousands of scam companies that are charging borrowers hundreds of dollars to enroll in these, but you should not ever pay them. If you're contacted by one of them, you should complain to the Consumer Financial Protection Bureau. And I'll show you a slide at the end that's got the location of where to go to do that. Next slide, please. Oh, actually, this slide has it on it. Look at that, cfpb.gov down at the bottom. Okay, so we'll talk some about income-driven repayment plans. These are repayment plans that base your monthly payment on your adjusted gross income and family size rather than on what you owe. Your payments through these plans can be as low as $0 a month, and they can even cancel your remaining student debt after 20 or 25 years, regardless of whether or not you work in public service, which is important for PSLF. These repayment plans and forgiveness provisions that are included in them are for federal student loans, which make up about 90% of all outstanding student loans today. There are a few different types of those. Broadly speaking, they're in 4 buckets, and those 4 buckets are down here at the bottom of this slide. Direct student loans, which are the newer group of federally issued student loans. FFEL, they're called FEL. It stands for Federal Family Education Loans, which are the older loan program that pre-existed the direct loan program from the Department of Education. Parent Plus loans, which are what the Department of Ed makes available to parents to take out on behalf of students that they're sending to school. And Perkins loans, which are specific to institutions. There are many institutions where you can't get a Perkins loan and it may not be relevant to you. But if you have one of these 4 types of loans, generally speaking, you are in a federal student loan, and so what I will describe to you about IDR and what Ms. Mangum will describe about PSLF will apply to you. If you are not sure whether your loans are private or federal, there are a couple things you can do to check it out. The first one is to check the name of the loan that's on your monthly bill to see whether that gives you any information. The second is to log into your federal student aid account. So this is the place that you went to fill out the FAFSA originally in order to apply for student loans. It is also a place that you can use and access to navigate your repayment process, and they will have notes in there as to which of these loans. They contain only federal loans in your FSA account, and so if you do not see a loan there, then you know that it's private. If we could go to the next slide, please. Before I describe a little bit more about how income-driven repayment plans work, I just want to let you know about these 2 important definitions because they're critical to thinking about how the IDR plans will function for you. The first one is discretionary income. It's the difference between your adjusted gross income and 150% of the federal poverty guideline for your family size. That's calculated based on what you're reporting to the IRS as adjusted gross income. So any income that goes to a pre-tax item like health insurance, benefits, premiums should not appear in this number. If you could add the next slide, please, or the next bullet, please. And family size, which is important because when it comes to these repayment plans, your family size may be very different from the number of exemptions that you claim on your federal income tax return or the number of dependents you have as defined by the IRS. The Department of Education and the IRS definitions don't have anything to do with one another, and there is no moment at which they attempt to square them up with each other. So you should have no concern if they are different from one another. That is by design and not an accident. Family size includes you, your spouse, and your children if you're covering more than 50% of their living expenses. And it doesn't matter where any one of those people lives, they're in your family size. Family size also includes unborn children who will be born during the year for which you're certifying your income. And we'll talk in a second about what certification is. And it includes other people, for example, older family members, if they live with you now, receive more than half their support from you and continue to receive that support for the year that you certify your family size. So obviously with people who are in multi-generational families, particularly if you're providing housing for an older family member, you may be well over the threshold of providing half their support. Next slide, please. So I want to show you an example of an actual borrower to help you get a sense of how would this work. So this is Anna, who just has an adjusted gross income of $46,000. She is married and has 2 children. She graduated from college recently, and she has $37,000 in direct loans. So under the standard 10-year repayment plan, which is the default that she would be put in upon her graduation, she would be owing $353 a month, which is obviously a huge hit out of a monthly adjusted gross income of $46,000. So if we flip to the next slide, we can see what she would pay under pay as you earn. So with that adjusted gross income, we're going to subtract from that 150% of the federal poverty guideline for her family size, which is $41,625. And that will leave us with $4,375 in discretionary income for the whole year. So when you multiply that by 10%, because that is the proportion of your discretionary income that is on the table to make payments in this repayment plan, pay as you earn, she gets $437.50 as the total amount that she needs to pay annually. And when you divide that by 12, she's going to be paying $36.46 a month, which is obviously a huge improvement over that $353 number. So that's an illustration of how income-driven repayment can help the situation of an individual borrower. It's also essential because income-driven repayment plans are an important, necessary part of the process to get to public service loan forgiveness. When you're applying for public service loan forgiveness, what you want to have happen is to make the lowest possible payments throughout the 10 years that you're in repayment and get the maximum benefit in terms of cancellation at the end of that time. And so you'll always want to be in the payment plan that gives you the lowest payment, and the income-driven repayment plans are the ones that are eligible for PSLF, so they're the ones that are sort of your choice. There are 4 of these plans right now. Pay as you earn is the most generous of them. The Biden administration has recently announced that there's going to be a 5th income-driven repayment plan that actually will be even more generous than pay as you earn. For that repayment plan for undergraduates, it will be only 5% of discretionary income on the table for making payments. So folks who enroll in that new plan once it comes into existence in July of 2023 are going to see even improved circumstances in terms of what they have to pay in a month. To apply for income-driven repayment, you do want to keep in mind that you have to recertify your income at least annually. If you do not do this in the 12th month, you'll still be enrolled in your income-driven repayment plan, but your payment amount will shoot back up to the 10-year standard amount. And so when this happens to borrowers, they end up with, okay, they took out the $353, and then I had 3 or 4 other bills that hit my bank account, and I got overdraft notices on all of them because I didn't expect it to be $353. So critically important, mark on your own calendar when you certify your income that you're going to do it again, let's say even in 11 months. The flip side of this is that you can always certify a lower income or a higher family size before that annual time comes due. So if it would benefit you, if you would get a lower payment by doing it, you should recertify your income at a lower level or your family size at a higher level anytime you have an opportunity to do that. Also, just a reminder, you don't ever want to pay anyone to enroll you in these plans. And I think that with that, I will hand this to Ms. Mangum to talk some more about public service loan forgiveness. I have some slides in here, but we don't need to go through those now because I think she's got more to say about PSLF, and then we can sort of share the Q&A at the end.
No problem. Thanks so much, Alyssa. That was some really great information. I hope that our listeners and attendees definitely got something out of that. And I know we have more to expound on with the other panelists. So thank you so much. So before we continue, we are going to stop for a brief second, everyone, to poll to see what we have in our audience. So we want to hear from you. We have a couple of poll questions. We're going to give you about 15 seconds per question so that you can answer and provide the best response. So here we are. For our first question, please select the choice that best represents your race or ethnicity. Thank you so much. So, okay, that's great. That's great to know who we have in the audience. Thank you all so much. We're going to move to question number 2. Please select the choice that best represents your employment currently. Please pick one. All right, so majority of our attendees here are 76% full-time, some part-time, and then of course some not employed, which is perfectly fine. Question number 3, please. Please select the choice that best represents your age range. Okay, wow, this is great. Thank you all so much. So we may have some people interested in some Parent Plus information here, depending from that 50 to 59 age group. Next question. Please select the degree you have completed. Some of you may still be students, but just select the degree that you've completed thus far. All right, a lot of master's degrees in the room. Thank you. Thank you so much. Thank you. I believe we have maybe one more question. Please select the estimated amount of student debt you currently have. Just trying to see how much people, we know majority of you have probably well over 50,000, but it's nice to know the amounts. Oh, well, excuse me, less than 50. That's amazing. That is amazing numbers there. Thank you so much. So what is happening currently will definitely be helpful. I'm not sure if we have any more. Oh, there we go. No, I think this is the same first question back. All right, I think we may be done with, oh, there we go. Your loan types, excuse me. Type of student loans you currently have: private, coming from a bank, or Sallie Mae, public, federal, Stafford Perkins, or both. All right, majority of public loan holders in the room, and then some that have both types and a smaller set of just private. Perfect. Well, we have something for everyone here. Hopefully you all will leave here with some information today. Is there any more questions that we have?
That'll be all.
All right, perfect. Thank you so much. Well, I will move into introducing our next panelist. She is here for more question and answer, but it's super excited to just even have her in the room with us, and she'll be introducing our next panelist. They work within the same department. I have the pleasure of introducing Ms. Monique Toussaint. Monique Toussaint is the Senior Career Leader for the White House Initiative on Advancing Educational Educational Equity, Excellence, and Economic Opportunity for Black Americans. What an honor to have her here with us tonight. The initiative works to develop, implement, and coordinate educational programs and initiatives at the U.S. Department of Education and other agencies to improve educational opportunities and outcomes for Black Americans of all ages. Ms. Toussaint manages the operational duties of the initiative, which include strategic planning, project management, and programming. She also coordinates the Student Volunteer Intern Program and facilitates relationships with internal and external stakeholders. Ms. Toussaint, I'm so thankful to have you here today. Thank you so much for being with us. And I'll give you a chance to talk a little bit about what you do.
Thank you so much, Candace. Thanks for having me. I am so excited to be here. Good evening, everyone. Again, my name is Monique Toussaint, and I bring you greetings on behalf of my office. And since it's our first time engaging with your audience in a while, I just wanted to share a few words about what we do at the Department of Education. So we have White House in our title, but we are one of 5 White House initiatives located at the U.S. Department of Education. We have a historically Black college and university initiative. We have a Hispanic initiative. We have a Native American and American Indian initiative. And then we have our sister colleagues, the Asian American, Native Hawaiian, and Pacific Islander initiative located at HHS, as well as our Center for Faith-Based and Neighborhood Partnerships, all work together to serve our constituents. So for my office, we were previously known as a White House initiative on educational excellence for African Americans. And we were commissioned in 2012 by President Barack Obama to improve educational outcomes for African Americans of all ages. So since our inception, we celebrated 10 this year. We're the youngest initiative, but we're doing great things. We have worked with individuals, organizations, institutions to highlight and share effective national and local programs, policies, and practices that support the success of Black students and provide them with an education that prepares them for college, satisfying careers, and productive lives. So we work to leverage relationships with partners, new and traditional, to shape positive and affirming narratives of Black students, highlight and disseminate promising and proven practices, as well as provide recommendations to accelerate Black educational excellence essential to our community. So participating in today's event is evidence of our commitment to our mission. It is one of many opportunities where we get to engage with our stakeholders, such as members of NCNW, and highlight issues that are critical to the success of all Black students, families, and communities, such as student loan debt. As an update in student loan debt relief, on Tuesday, the White House released state-by-state data and how the Biden-Harris administration's plan for student debt relief will benefit borrowers in all 50 states, Washington, D.C., and Puerto Rico. Last month, as Alyssa talked about, President Biden announced his plan to give working and middle-class Americans more breathing room by providing up to $20,000 in debt relief to all Pell Grant recipients and up to $10,000 to other borrowers. So they expect that over 40 million borrowers are eligible for its student debt relief plan, and nearly 20 million borrowers could see their entire remaining balance discharged. The student debt relief plan will help borrowers and families continue to recover from the pandemic and prepare to resume student loan payments in January 2023. Nearly 90% of relief dollars will go to those earning less than $75,000 per year, and no relief will go to any individual or household in the top 5% of incomes in the U.S. By targeting relief to borrowers with the highest economic need, the administration's actions are also likely to help narrow the racial wealth gap. Nearly 71% of Black undergraduate borrowers are Pell Grant recipients, and 65% of Latino undergraduate borrowers are Pell Grant recipients. So in the coming weeks, the Department of Education will release additional details on how individuals across the country can benefit from the administration's student debt relief plan. And for more information, you can visit studentaid.gov/debt relief. And I can drop that link in the chat for you. Again, the purpose of our participation today was to bring awareness about our office to tonight's attendees. We are committed to providing access to resources and best and promising practices for advancing educational equity, excellence, and economic opportunity for Black Americans. We look forward to connecting with stakeholders such as yourself, and you can follow us on Twitter at AFM Education or on Facebook at WH Black Education to stay updated with our latest news from our office. Thank you for having me today. And now to the meat of the program, right? So I'm here,
Yes.
here to provide information about the Public Service Loan Forgiveness Programs is my dear friend and colleague, Tanika Mangum. Tanika is one of the outreach specialists for federal student aid here at the U.S. Department of Education, a noteworthy presenter who aims to ensure every participant has a clear understanding of federal student aid programs, tools, and resources, and how to best utilize them. So please join me in welcoming Tanika to the virtual stage. Thank you for your time.
Thanks so much, Monique.
You're welcome.
Tanika, are you with us?
Yes, I
There she
am
is.
here. I am
There she
here.
is.
Hello, good evening, everyone. I'm super excited about this. This has been an amazing night so far. Can we just, everyone in the chat could just celebrate the fact that we're getting some amazing information. And I'm so
Yes.
excited to add to that. So wonderful job to all of my featured speakers, guests, to share with you about how can you manage your student loans and a little bit about loan forgiveness. So as Alyssa said, my job today is to help you understand public service loan forgiveness, especially the limited waiver that has been going on this year. And so we're going to get right into it. Yeah? Okay, let's go.
Let's
Next.
do it. Let's do it.
So today we're going to cover everything about public service loan forgiveness, the basics. Many of you may have never heard of this program before, so I'm going to catch you up to speed about what you need to know about this program. And then we're going to go into the limited PSLF waiver and all of the benefits that are happening right now and how you can apply during this limited waiver period to benefit from all of those changes. And then we're going to end with some tools and resources. And of course, we'll always get into question and answers. Next slide, please. Okay, the PSLF basics. Let's go. So next slide. Let's talk about what public service loan forgiveness means. It means it is forgiving the remaining balance on your direct loans after you have made 120 qualifying monthly payments under a qualifying repayment plan while working full-time for a qualifying employer. That is 5 different steps and 5 different criteria that you had to meet in order to be eligible for PSLF. So again, when earlier Alyssa talked about it's beneficial for you to be on an income-driven plan and find the least amount for you to pay each month so that you can get the remaining balance covered, this is what she's referring to. This program was to allow for your remaining balance to be cleared. Now, with those 5 steps, a lot of people are probably wondering, there were some challenges in this. Not everyone can meet all 5 all the time for 10 years. Yes. So there were so many challenges that many of our public service workers were facing during this public service loan forgiveness. So let's go on to the next slide. And I want to break this down a little bit more because when we go into the limited waiver, I want you to be aware of why this is so significant, okay? Because I want you to bring the energy with me, okay, about the excitement of this limited waiver, okay?
Yes.
So again, under the PSLF basics, just the basic plan was that you had to make 120 qualifying payments. That means that you had to make a payment every month in a year for 10 years to have 120 qualifying payments. Now, what is a qualifying payment? A qualifying payment is one where you paid the full amount due. Okay, so that means when you got your bill, it said, okay, just like Alyssa said an example, maybe it was $437.50. You would have to make that full month payment, the full $437.50 payment in that month in order for it to even count as being a qualifying payment. In addition to that, it also had to be on a direct loan. So that means you could only have direct loans in order for you to be eligible. What is a direct loan? A direct loan will be your direct subsidized loan. It will be a direct unsubsidized loan, or it can be a direct plus loan. There's only 3 direct loans, but there are 2 plus loans. There's a direct plus grad, yes, and there's a direct plus parent loan. Okay, so these are the only direct loans that you could have. So the FEL that Alyssa was talking about on the Perkins were not eligible for PSLF. Then you also had to work for a qualifying employer. So a qualifying employer meant that you had to work for a nonprofit, someone who's in a 501c3. So it did not matter what you were doing on the job. It mattered who you were working for and how they classified and the tax purposes. And then lastly, even after you did all that, you would have to apply for, and you can only receive forgiveness if you were doing all of that at the same time. So this hurt retirees. This hurt people who maybe switched a job to a private equity that was not a 501c or a nonprofit, because they were not able to receive the full forgiveness of the remaining balance because they did not currently work for a qualifying employer. So as you can see, there's a lot to manage with this program. So let's move forward. Okay, so now we're getting to the amazing news of the limited PSLF waiver. And I hope that you're ready, because I'm excited for many of you who are on this call who may not even be aware of this program, what's happening right now. You're probably thinking, I canceled myself out with public service loan forgiveness, but we're gonna stay just right here and we're gonna tell you all the great benefits that are happening right now. Next slide, please. Okay, so there are a lot of changes. This is called the limited waiver. Now, why is it called the limited waiver? Because the deadline is actually October 31st, get this, of 2022. That's this year. So hallelujah, amen, that you're on this call right now if you are eligible, because you have just made the cut, sweetheart, okay? So this is so important for you to know that, okay, let me tune in here, let me take some notes here, let me make sure I'm eligible here, because I want you to make actionable steps about what do I need to do if I'm eligible. So what has changed? So normally we talked about you can only receive credit on direct loans. Yes, I said that. This limited waiver changed that. Yes, it did. It said now you can receive credit on payments that were made on direct and FEL and Perkins loans. Okay, so if you have a FEL or Perkins loan, you should be turning your head real quick to the screen right now and saying, yes, yes, that's me. Oh my gosh, what is she talking about? And zooming in, because now you are now eligible towards PSLF and meeting those loan requirements. The other thing that changed is that payments had to be made on a standard plan or an income-driven repayment plan. So Alyssa talked about earlier that there are 4 different income-driven plans, and you have to be on one of those or the standard 10-year plan, even though we do not recommend doing the standard 10-year plan because you're paying off your loan. Again, the goal of PSLF is for them to cancel out the remaining balance, right? You don't want to pay the whole thing. So don't do the standard plan if you're going to be doing PSLF because you want the benefit of being forgiven. Now, under the limited waiver, get this. It doesn't matter what plan you're on. Oh, let me say that again for the people in the back. It does not matter what plan you are on. So whether it be income driven, graduate plan, extended plan, if you are on a standard plan too, hey, listen, you can jump in here now too. All of it counts now. So no matter what payment plan you were on, all your past payments can now get credit toward your 120. Now, before, remember I said that you had to make on-time payments to count, right? So you had to make the whole $437.50 Alyssa talked about. Well, now it's saying it does not matter if it was a late payment or a partial payment. So if you made it late meaning past the 15 days after due, or you didn't make it at all, we'll talk about that in a second, okay? Because some people are like, wait, I didn't make it at all. We're going to talk about that in just a second. And let's say you only made a partial. Maybe you've only were able to put $40 on it or $60 on it. All of those will now count as if you made a full month qualifying payment towards 120. Okay, so that's amazing. And then lastly, again, you had to do all of those things for the basic plan, and you had to be working for an eligible employer at the time that you applied in order to receive forgiveness. Retirees, this is a blessing. The limited waiver changed that. Now it's all past employment. You don't actually have to be in an actual qualifying employer now in order to get PSLF. So can we get some handshakes and hear some claps, because this limited waiver is changing the game for so many borrowers. And so I wanted to share this with you so that you can have it. You should be screenshotting this slide right now so that you check everything and make sure that it is perfect for you if this fits. So let's go into some more details though. Next slide, please. Okay, so let's go deeper. You are in one of three groups. Everyone on this call is usually on one of three groups if you are a federal borrower. Again, this is only for federal student loans. So if you borrowed in direct loans, the only thing that you need to do to take advantage of a limited waiver is that you need to complete the PSLF form. That's the only thing that you need to do. But let's say you previously consolidated into a direct loan. Maybe you had an underlying direct consolidation loan and you're wondering, does that make me count, or does that take me out? No, you still are eligible, and all you need to do is complete the PSLF form as well. But let's say you're those Fell Perkins loan borrowers who were not in a direct loan program. And now you're saying, well, I know I made 120 payments under my Fell or Perkins. What do I need to do? You actually need to do something first. You need to consolidate your Fell or Perkins loans into a direct loan program first, and then apply for PSLF. Now, please note, during this time, because we have a limited time, again, limited waiver, you can do them both at the same time and still get your payment counts to happen. But in order, if you want the payment counts, your past payments to count towards PSLF, you do have to consolidate into a direct loan program. Next slide, please. Oh, I think we might be stuck a little. Okay, so eligible loan types. Again, I talked about what are direct loans. So many of you might be struggling trying to figure out what kind of loan do I have. You should look at your status of from your loan servicer about your loan types. It will tell you if you have a direct unsubsidized, a direct unsubsidized, a direct plus loan, or it might say, the federal family educational loan, or it could say federal Perkins loans, Perkins for short. Again, in order to make your Fell or Perkins loan to be eligible for PSLF under this limited waiver time, you must consolidate into a direct loan program. Okay, next slide. Okay, so Candace mentioned it, Parent Plus. Okay, all the parents are like, okay, here we go. So, all right, so Parent Plus, what happens? I just mentioned, the plus grad loans on the sheet, and you probably wonder, I don't see my loan there, Tanika, what's going on? Well, here's the thing about Parent Plus. Parent Plus is a little different when it comes to limited waiver. So it has three different scenarios. So let's break it down. So the first scenario is you have a student loan yourself. So let's say you're a parent who went to school and you've taken out your own student loans, and then you ended up taking out some additional Parent Plus loans to support your student. If that is the case and you would like to take advantage of the PSLF limited waiver, you can consolidate your loans together, and the payment counts from your student, so the payments that you made for your student account will actually be credited as the 120. But you won't get additional credit counts for your Parent Plus. So for example, let's say for your student, you've made 80 payments. And for your Parent Plus, maybe you've made 40. when you consolidate them together, you won't have a count of 100, you will only have a count of 80, okay? Yeah, 80, okay? So 80 for your student loans, but not your Parent Plus will not be additional credit. But the nice thing is when you consolidate them together on a limited waiver, if when you make to 120, it will forgive your Parent Plus too. Okay, so that's amazing because that's not usually that happens. So if you have a student loan yourself and you have a Parent Plus and you would like to take advantage of a limited waiver, now is the time to make sure that you're having that together. Okay, the second scenario, let's say that you do not have any student loans of yourself, but you have Parent Plus loans yourself. So you just took out Parent Plus loans for your student. Well, there's two scenarios here, which is why I'm saying there's three. So the first one is, let's say you previously consolidated your Parent Plus loans. You previously consolidated them in 2010, for example. So 2010 to 2022 is 12 years of payments, yes? So if you've made 12 years of payments, because it was a past consolidation, which is considered a old consolidation, then all of those payment counts will count towards PSLF under limited waiver. Oh, I just blessed somebody's heart today, okay?
Yeah, you did. Yes, you did.
So that is amazing for someone to be like, wait, what? So I'm gonna say it one more time, just so you guys hear me, okay? If you have a Parent Plus and you consolidated in the past, any year after 2007, okay, gotta be clear here. Why October 2007? Is because the program started in October 2007. So they cannot do past payments before 2007. That's for everything, not just Parent Plus, that's for everything. So many of you have been working 30 years and you started paying back in 2000. They will not count the payments from 2000 to 2007. It has to be from October 2007 onward payments, okay? So I just wanted to make that clear for everyone. But if you have a Parent Plus loan and you past consolidated into a previous year, those years up to now will count towards PSLF towards your 120. Now, what if you did not consolidate before? Okay, so this is where it gets sticky for so many. So if you've never consolidated before your Parent Plus, you just had them, you just making payments. Unfortunately, if you consolidate now, you will be starting your count now because it's considered a new consolidation. So unfortunately, you will not get your past payments to count. So you would need to, again, build up to the 120. So this news for Parent Plus is really great for those who already have one, their student loan themselves, or if they've been a past consolidation before with a Parent Plus loan. Okay, next slide, please. Okay, so applying, let's get into applying. How do we take advantage? Next slide. Well, let me tell you, there's only one form. Before, there was multiple forms. There was one for PSLF, there was one for TE PSLF, there was one for employment, there was so many forms. There's only one. There's only one form now. We've consolidated into one. So when I say PSLF form, that's what I mean, just one. So don't go try to find different stuff, just one form. Okay, so next slide. So where can you fill out this form? Well, the first thing that you want to do in this process is that you actually want to identify that your employer is indeed an eligible employer, right? Now, what makes an eligible employer? Again, that's that nonprofit status, that 501c3 status. So you need to go onto the employer search tool, and I put the link here for all of you. You want to go there and you want to have the EIN number, the employer identification number of any of your past employments. Again, we're counting past payments now, right? So maybe you're not working for an eligible employer now, but you used to, right? Maybe you're not working for it now and you're retired, but you used to. You want to get those EIN numbers of those past jobs, and you want to put them in and make sure that they are indeed eligible. Now, here's a caveat. Many, and not all, of the eligible employers will not be on this database. So if you believe, hey, I'm with a 501c3, but it's not showing up, it's saying unlikely, that just means that maybe someone hasn't applied from that organization before. There's no possible way that we can do a whole database of everyone. So if you truly believe, yes, I know that I work for an eligible employer, I know that they're nonprofit, I know that they're not private, then you can still complete your PSLF form and attach either a W-2 or the statement with the EIN number as proof that yes, it is indeed an eligible employer. Okay, next slide, please. Now, once you do that, you're going to be able to log into our help tool. Now, the PSLF form could be tricky if you're trying to fill it out by yourself, but we don't want you to do that. We want you to have help. So this is why we created the PSLF help tool. It literally is a guide to completing the PSLF form. There are 5 sections. So the first section is your employment history. That's where you're going to put your EIN numbers in. You're going to make sure that all your employer information is in there. Here's a note for everyone. When you you're going to put your EIN numbers and the dates that you've been employed. So you're going to put your start date and your end date. Hear me good. If you are still employed with an umbrella, do not put an end date. Because what you're doing is telling them to cut off from counting on that date that you're submitting. If you're still employed there, do not put an end date because we want those payments to continue, correct? Now, this is super important, especially right now, because we're under COVID-19 forbearance. COVID-19 forbearance means that during the Trump administration in 2020, they said, hey, we're going to put this COVID-19 forbearance because we're in the middle of a pandemic, and that means 0 interest and no one has to make payments if you are with a federal loan. So if you are a federal loan, most likely the direct loans, because there were some who were fell that still had to make payments during the pandemic. But if you were one of those who were not, you go into your system that says administrative forbearance, that is the COVID forbearance. That means 0% interest and you're not required to make payments. Here's the nice thing about it. With PSLF, all of those months are showing up as if you paid. Oh, I'm going to say that again. That means from March 2020 till when repayment starts, which is now slated to be January 1st, so December 31st of 2022, that's almost 2 full years of payments. That's almost 28, 29 months of qualifying payments. So this makes a huge difference if you're at 90 payments, you made 90 past payments and you're like, oh, it seems like I need 30 more. Well, we're giving you 29, right? So you want to definitely fill out this form. It is not automatic. This is where I say that. It's not automatic. You have to submit this PSLF form in order to get all the months from March 2020 to the end of this year to count towards PSLF. So even if you're not interested in PSLF, like, oh, let this lady go off the screen. Hey, if you want those past payments to count from March 2020 to now, you're going to fill out this form. It's the same form. So you want to fill this out and you want to make sure you complete all 5 sections so that way you can be eligible. Okay, next slide, please. Here's an update. I really want to make sure that people know if you're a service, if you've served our country in any form, there is an opportunity for you to use your DD-214s in order for employment certification. Service members usually, instead of having to go to each individual office and do all those counts, you can use that one form, the DD-214, submit that with your PSLF form, and that will count as your employer certification. Okay, so I wanted to make sure that's clear for everyone. Next slide. So when we come down to the confirmation page, you are not done. So you just submitted everything for your PSLF form. You are not done. The reason why you're not done because we need to submit your form now. So as you see, there's going to be a link that says download the PSLF form. That is literally all the information you just put in to the actual help tool. This form is what you're going to send to only one loan servicer. Now you may have a different loan servicer, but there's only one who is managing the PSLF program, and that is Mohila, okay? Mohila is the only loan servicer who's taking care of PSLF. So although you might have Nelnet or AdVantage or any other loan servicer, you are only sending it to Mohila. So you're either gonna mail it to Mohila or you're gonna fax it to Mohila. If you transfer, so as Alyssa had stated, that there are some loan servicers who are no longer administrating student loans. One of those was Fed Loan. Fed Loan borrowers were now transferred to other borrowers, or other loan servicers, excuse me. So if you were transferred to Mohila and you are now a Mohila borrower, now you get to upload, instead of mailing or fax, you can actually go to mohila.com and upload your form into PSLF. Okay, next slide, please. Now, I want to make something really clear about the next slide. So we got our form. You got to get your employer certification. So after you downloaded the form, now you need to get signatures from each of your employers to verify that you indeed work there for the full-time status. What is full-time status? That's up to 30 hours a week. Now, many of you may say, "Ooh, wait, I didn't do 30 hours, I was part-time." Well, under the limited waiver and for PSLF in general now, if you work 2 part-time jobs that work both for eligible employers, and that equals up to 30 hours, you can count those towards PSLF. So if you work 2 paid part-time jobs to get to 30 hours, you can now still qualify for PSLF. So here's the thing with signatures. We're not that advanced yet. We have some changes that we need to make in terms of signatures. So no, you cannot use like SignDoc or any of those platforms that let you do a signature. No, we can't. We don't allow those. It has to be a manual, actual hand signature, or it has to be someone signing their name on a piece of paper, taking a picture of it, and then uploading it to the spot where their signature would be. But please, it has to be in its original format, which means don't send it to someone, they sign it, and then they fax it to you. Okay? That's what a lot of people get trapped up. It's like, well, they signed it. It's like, yeah, but they faxed it to you. So now it's a print, and now we can't tell if it's a real signature or not. So it has to be either an image, or it has to be so that they can like email it back to you, but please don't have them scan it back to you. That will make it invalid. Okay, so make sure that you're not using italicized font either. Nope, that won't count either. So just make sure that you are doing hand signatures or taking that photo and attaching it. Next slide, please. We're coming towards the end here. So again, I just want to make sure everybody's clear. You have to confirm you have an eligible employer. You have to consolidate your loans. If you're fellow Perkins, you want to take advantage of this limited waiver now. You've got to consolidate into a direct loan program. And you have to download your form, get the signatures, and submit your form. Submit your form all before October 31st of 2022. Okay, so this should be your #1 job if you really want to take advantage of this. Next slide, please. Okay, so some final tools and resources. Next slide. I want to make sure that you guys have the information. So, you know, when I've been talking about this program for so long, which is why I love it, and I'm so happy to share it with you. But I knew that there was some feedback about, I'm trying to understand, am I eligible, what's going on? So yours truly created this PSLF checklist that is now on the studentaid.gov site. So you can go to studentaid.gov and you can either search in the search bar PSLF checklist, this will come up for you, or I know that this presentation will be shared with all of you, so you can hyperlink it there too. But this will help you to navigate all the steps I was just talking about to make sure that you don't miss anything and to indeed make sure that you're eligible. Next slide, please. So PSLF resources, I really want to make sure if you did not really understand everything that I said, we do have a site specifically about the limited PSLF waiver. So you want to go to PSLF waiver, that studentaid.gov site. Again, to fill out the form is PSLF help tool. You want to go straight to studentaid.gov/PSLF. If you're looking for general information about public service loan forgiveness, any updates, any press releases, all of that stuff will be on studentaid.gov/public service. And Mohila, the most important place that you need to know where to submit. Earlier I just said you can mail or fax, but did you notice I didn't leave a number? Oh, here it is. So here is your numbers that you need in order to make sure that your information goes to the right place. So you can call them if you want to check on the status or figure out how to submit things. If you're having the difficulties, you can fax them your form, and of course you can mail in your form. Okay, I think that is it for me.
Thanks so much, Tanika. I mean, I was here taking all types of notes. So I hope all of our attendees today took down some notes because this, I mean, the information was, I mean, priceless. This is so great. So please remember the important things, everyone. October 31st, 2022 is Halloween, but don't get caught slipping. Make sure you have this in as soon as possible. As soon as possible. So thank you so much again. Thank you to all the panelists. We're now going to open up some question and answer. I know a lot of you are attending, you have questions, you're not sure where you still fall. So we definitely want to open up the forum to have our panelists answer any of your questions that you may have regarding your student loans or where you stand with the relief that's being provided. So I guess all my presenters, you guys can come back on, Alyssa and Monique, and we'll just have an open forum right now. Hello, ladies. Thanks for coming back.
We have a lot of questions, and I'm going to try to consolidate them so as we can answer them succinctly. The first question I got was, is an IDR the same as an IBR?
Alyssa.
Sorry, I was just gonna say, such a good question, and I'm on mute. So IDR is like a rectangle, IBR is like a square. So IBR is one type. The IDR, income-driven repayment plan, is the overarching umbrella for all of the income-related plans. And IBR, income-based repayment, which is the one that people tend to have heard of the most, is just a subtype of that income-driven repayment plan.
Okay. Are government employees eligible for this programs?
Oh, absolutely. Yes, 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 and yes again.
I would say actually the thing that we see the most commonly in mistakes when employers fill out these PSLF forms is that particularly school districts seem to be very confused about whether or not they are government employers. They are. They should check the government employer box. They should not check the nonprofit organization box. They are accustomed to thinking of themselves as nonprofits, and so they kind of want to, but if you check two boxes, the form will get kicked back. They should check only one, and if you're working for a school, it should be the government employment box.
In a public 401c3 school. So if you're working for a private school, it would not be eligible for PSLF.
How do you certify your income?
So using, if you're getting into an income-driven repayment plan for the first time, or if you are recertifying your income, the way to do this is through the Federal Student Aid website. If you go to the FSA.gov webpage, you will find all the links for enrolling in an income-driven repayment plan there. And you will also find the repayment estimator that enables you to calculate how much will I pay under the different income-driven repayment plans that are available to me. And you can enroll that way as well.
Yes, and that direct site is studentaid.gov/loan-simulator. So again, that's studentaid.gov/loan-simulator.
I have an interesting question here. It says, what if you have never paid a penny?
What if you have never paid a penny?
We've had borrowers in that situation. So like to some extent, the answer will depend on for how long you have been doing that. So if you're a person who's been in deferment or forbearance for 10 or 20 years, you're going to be in a really different situation than somebody who graduated, say, in the fall of 2019, and by the time they would have been in repayment, we were into the pandemic payment pause. It's a little bit hard to tell without knowing which one of those circumstances we're in.
Yeah, and if I can add to that is, let's make clear that there are some repayments for the income-driven repayment plan that your actual requested payment amount could be zero. So you could not be making a payment and still be in a repayment plan and still be in repayment status. So it's best for you to check to make sure, one, am I required to make a payment and is my amount zero? Or am I not making a payment? If you're not making a payment and you are in a repayment status, then that means that you might be in a default status. If you're in a default status, meaning that you have missed a payment over 90 days, then that means that you would not be eligible for PSLF. You would need to come out of default first in order to be eligible for PSLF or any of the loan forgiveness programs. And if you're in deferment, so let me be clear here, for in-school deferment or grace periods are not eligible for PSLF because you're not in a repayment status, okay? So it has to be in a repayment status. So if you are in school right now and you're not having to make payments yet because you're not in a repayment status, then any of that time will not count towards PSLF. It's only when you're in repayment status and that you are being counted as qualifying monthly payments to be count towards the 120 for PSLF specifically.
Wow. Okay, that's great to know.
It's been years since I've done this. How can I locate my FSA ID to log in?
Oh, I love this question. Welcome back. We've missed you. So, well, you can start to go to studentaid.gov. And on there, when you try to log in, obviously you don't know where to start. So it's best to click on Forgot Password. Please don't try to create a new account because that means you're going to try to duplicate and it's going to lock you out because it is a government site and there's certain personal information that is required in order for you to create an FSA ID, such as your social security number. So it's best to click on the Forgot Password and it's going to take you through either some security questions that's going to kick back to that email. I mean, many of us have lost a password, right? So it's going to do the same thing like as if you normally would. It will kick back to an email to help you reset and to get into your account. So start there, studentaid.gov.
And I'll make a note really quickly with that. I recently tried to get into mine and I was locked out because my FSA ID, something was wrong. And I had to call someone. I spent like 30 minutes on the phone, got someone, they sent me a verification email. And then at that point, you're allowed to kind of update because maybe you don't have that information anymore. And they'll allow you to update and then they'll give, I think the window is about 7 days for them to follow up with you to unlock your account. But it happens, trust me, I tried it myself.
Yes, that's a great point because, you know, it's a government site and we don't want to just say, oh, you forgot your account and just give you something else. And it could be somebody else that's trying to get into your system, right? So it's going to take a little bit longer to verify that it's in fact you so that we can make sure it gets used. So stay patient in that. I know it seems like, oh, just give me my verification, but we really want to make sure it's you so that you're not getting scammed and all of those things. And Alyssa mentioned scams earlier. So there is a lot of that happening. And so we want to make sure that you're being protected from us and that we hope that you're also staying protected from anyone that's calling you, emailing you. Listen, let me say here, and I hope everybody on the panel will agree with me, you should only be looking for the department for information. So if somebody's calling you saying, hey, can I get access to your FSA ID? Can I get into your account? I can help you get loan forgiveness. I can help you fill out the form. If you just pay me all the stuff, no, none of that is supposed to be happening. Okay, none of that's supposed to be happening. Please try to make back to your connections with your loan servicer, make back connections to your studentaid.gov account, and really go through that process. But please do not fall for any of the scams because they're going really hard right now, and I don't want any of you to fall in those traps.
That's very true.
I'm
Any other
72
questions?
years old and retired. I only receive Social Security. Is there a program that will allow me to have forgiveness with my student loans that are over 121,000?
So I missed the first part of the question. I heard retiree, and what's the first part?
I'm a 72-year-old retiree on Social Security. Is there a program that would allow me to have forgiveness of my student loans over $121,000?
Well, my first initial reaction would be, who did you work for when you weren't retired? Right? So if you were working for an eligible employer, the PSLF program in this limited waiver is literally for you. So if you worked at any form, any time from 2007 on, and you worked with an eligible employer, you absolutely want to complete that PSLF form. Again, the PSLF form is to forgive the remaining balance. So that 120 could be gone. Right? It really could be gone for you if you have worked for an eligible employer. And if you, again, if you had fellow Perkins, you consolidate first and you fill out this form, then if you made the 120 because you've already retired, then this is for you, right? So I would highly encourage you to look into the program, see if it fits your needs, and then go ahead and go for it so you can live a beautiful retirement.
Yes.
We have
The
many
other,
questions. Go ahead.
oh, I just want to add for that person asking the question that if it turns out that that method of sort of looking back at your work history doesn't get you exactly where you want to go, you should also know that the income-driven repayment plans do contain cancellation provisions themselves. And so whether you've been in one in the past or not, you should absolutely seek to enroll in one now, because that will get your payment to the lowest level that it can be at. It may even be zero, depending on what your adjusted gross income and family size are. And for that payment to be in a sustainable place until the forgiveness provisions of the income-driven repayment plan kick in. That won't be as soon as PSLF, right? For folks who are eligible under the waiver, for some of them, they're discovering now retroactively that they'd already done everything they needed to do and they're getting to cancellation now, or maybe they'll get there in 2 or 3 years. For people who are getting to cancellation through IDR, it can take longer, but it can happen. And in the meanwhile, you can stay in a current status in your loan so that they're not causing you problems in the rest of your life. And that is what an income-driven repayment plan could be really helpful for, if it turns out that you're not able to get all the way to PSLF forgiveness right now.
There are many questions
Absolutely
about
love that additional stuff.
There are many questions about your PowerPoints, so I must make the statement just so everybody doesn't have to take 1,000 notes. With your permission, we have turned the PowerPoints into PDFs and put it in the handout section, so everyone on here can actually download it and get all the links that you provided for them.
Yeah.
A person said, I did not start paying my loan back. No, that we answered that question. Do county colleges count as nonprofits? Interesting question.
Yes, for the purposes of public service loan forgiveness, yes, you would be a public employee, public service employee if you work at a community college.
Nice.
What if you only volunteer at a nonprofit?
Not W-2 employment. Actually, this is, it's maybe a moment to name this as well, is that it does have to be W-2 employment. So 1099 work for the same entity would not qualify. It has to be W-2 employment for the nonprofit or in the public sector.
My daughter is currently on a student loan with Sallie Mae with the rate scheduled to rise. What can be done to try to pay that off or have one payment?
I think I'll take that. So private loans are not included in this PSLF, waiver. So it would be best to reach out to your private lender to see what other opportunities there are. There's also the opportunity to look into consolidating through a different lender, places like SoFi and other people who will take on private loan debt. I've heard from others in communication that SoFi offers really decent interest rates. Probably that will be a lot lower than what Sallie Mae is, but you would have to reach out to them. There are also state organized programs that will look into private loans. I will post a link and have our tech post a link through for a news article that the Insider did regarding private loans, because they are not covered in any of the current administration forgiveness programs. And if anyone has anything else there.
Are there any agencies or groups available to review individual cases?
Yes.
To review individual cases. Okay, go ahead, Alyssa, go ahead.
Yeah, so I have a few options that I can hold out for folks. So if you are on this call and you are a member of the American Federation of Teachers already, we offer a benefit to our members of free access to the service Summer, which is a sort of a combination of computer algorithms and live humans who know about student loan debt, who take your student loan situation and assess it and give you recommendations about what to do next. And that is a free benefit of being an AFT member, partly because it is so important to us that nobody should ever be paying anyone to get them into income-driven repayment or public service loan forgiveness. If you are not already an AFT member and you would like to become one, in order to access Summer as a member benefit in this way, you can join us to do that as an associate member. And the way you do it is by going to the webpage, which I will also find a way to stick into the like slide drop down box here, aft.org/join Summer, because that just lets us know that you're somebody who is joining as an associate member because you want to get access to Summer's member benefits. We also do a lot of individual consultation with our members. And so if you start using Summer via either one of those means and find that you have more questions, you're more than welcome to contact us, and I'll put my email address in the chat as well.
Okay, this is a long one, bear with me, please. My family and I have been through several issues with the post 9/11 GI Bill. We were eligible, but then it does not cover past student loans. Are there any other new programs or updates that would aid us to forgive our loans? My dad is retired in 2007, but still works for the DOD, but we have not been able to get anything forgiven. We can only use the funds for future schools and education.
So this is a combination question because it's talking about the GI Bill, which is to pay for post-secondary education and not for forgiveness. So loan forgiveness programs, specifically public service loan forgiveness, is for those who are working with an eligible employer. It's stated in this question that they are currently working for the DOD, so that means that they are indeed eligible to have working for an eligible employer. They've said that they retired from service in 2007, and that is not necessarily a disclosure at all. So if they're currently working for the DOD, they should right now be putting in their form in order to get these past COVID-19 payments to count, these months to count, and any past payments that they've made on their student loan from 2007 onward to get to that 120. But there isn't a specific GI Bill or military loan forgiveness program.
Okay, last question. What do I need to provide show of family size?
It is self-attestation. So unlike the IRS form, where you have to supply a social security number, there is no social security number required on the Department of Education form. You do have to authenticate that it's accurate, and so it should be accurate. But you know, obviously, since the legitimate definition of family size includes unborn children, what would the authentication process? I mean, we're headed into some places where maybe somebody would try to get us to authenticate that, but we're not there yet. So it's not yet an element of the application, and you can just go through and list, these are the folks that I'm responsible for according to the rules that I described earlier tonight.
Well, thank you, ladies, so much for, like I said, taking the time today to present all the information you have presented on what's available. I hope that all of our attendees got something out of this. I know I did. I was feverishly taking notes, trying to make sure I was remembering things. I love that we've now shared it with everyone. So if you have not already, please look at the handout screen and download the presentations from the presenters today so that you have that. You can share that with your family and friends. This is not proprietary information. We want everyone to know that this is available to them, and please let them know about what we've offered today. The session will be available online So you can always go back to it and find it and refer to all of this information. I don't know if you ladies had anything else you wanted to end with, but I just thank you all again for being here. All right, well, thank you all.
Thank you.
No problem. Thank you so much for being here. Again, please remember some things of note. We have October 31st. October 31st is the deadline for the PSLF waiver. That is very important. If you're not sure, I've heard from many sources, just get it in. Get your information in. Get everything in. Don't wait to say, oh, I'm trying to get this. Get it all in. It's very important. It could definitely help you. I've heard other stories, success stories. Someone just got $120,000 waived. Done. PSLF waiver. She's been trying forever and she got it done with this waiver. That made it possible for her. So please do that. Again, I want to also extend, we are NCNW. If you are interested in becoming a member, please visit ncnw.org to hear more about the programs that we have across our organization. We would love for you to be a part of what we have going on. I thank you ladies again for being here tonight with us. Thank you to all the attendees for coming and have a great night.